Yeah. So welcome everyone. We are starting today our revisionary classes for the subject of indirect taxes, which is your CA final paper number 5. So welcome everyone for the revision batch. And in this batch, we shall be discussing, or you can say revising the provisions, revising all the relevant types of, you can say, queries, questions that may come up in exams. And also we shall be dealing with your questions, doubts, if any. So let us start. Yes, Swaminathan, how are you doing, Swaminathan? Yes, Swaminathan, can you hear me? Swaminathan? I think, okay. Okay, sure. Yes, students. So, okay, no problem, Swaminathan. My voice is audible. I am waiting for inputs from your. So yes, Mr. Khalid Bohra. So we are starting with the revision class. So before I take up in the sequence of the chapters, I would like to know if you all have any particular questions, queries, any particular thing you want me to stress on. So you can put it across to me so that accordingly I'll proceed. Okay, Swaminathan, I'll mute you. But which one you want me to unmute? Okay. Mm,
Hello, sir. Good evening, sir.
Very good evening, Swaminathan. How are you?
Yeah, very fine, sir. I was in another laptop which is not mic not working. Suddenly switching to my mobile now.
No problem. Yes.
I'm very,
So
I'm very fine, sir. How do you, sir?
excellent, madam.
After such a long time, we are meeting again.
Yes, correct.
Very, very happy to see you, sir.
Same here. Same here. So if you all have any particular queries, put it across. So we'll start with your queries first, and then we'll go to the topics. So anybody has any queries? Yes. No queries? Okay. Okay. So then let us start. So we start from the first chapter. The first chapter is the chapter on supply. Now again, since our paper at final level is more case study driven, also you have one paper which is multidisciplinary. So in both papers, or rather I'll say even including direct tax paper, see what is very important is your applicational knowledge. Now, when I say applicational knowledge, what it means? See, we will revise the provisions. Even I'll take you through few of the questions. But what is very important is how you approach any question, any paper, especially these three: direct tax, indirect tax, and multidisciplinary. So, first, I'll give you some generic approach, and then I'll come particularly to the GST portion and the indirect tax paper portion. See, whenever you are having a case study, what is very important, like first, let me talk about multidisciplinary because that is the one where students always come to us saying, sir, we find it difficult to handle the papers. See, you are even allowed books. It is an open book exam. But it is not, according to me, very important to open and refer the books. What is first important is decoding that the question that is at hand. One, what is the basic question asked? I've seen that many times when we are reading the case study. When we are reading, they will purposefully use a particular section of, let us say, Companies Act, or they'll give reference to accounting standard. So even before we reach to the actual questions asked, our mind starts calculating. And at times, I've seen students directly opening the accounting standard book, or they're directly referring to some book relating to taxes. But that is not the right approach. See, what is very important is because this multidisciplinary paper has been designed to specifically address the real life practical, I can say, scenarios that you will be handling when you are into practice or whenever you are into consultancy. So, what is important is a right approach. What is the right approach? See, the first most important thing is what exactly the question is about. You should first understand what is the question asking you to give your view on, or asking you to express your opinion on. Many times we are more guided by the details given in the question, which are intentfully either misleading, or they are kept ambiguous, or they are kept unnecessarily extra. And this is where we get drifted in the wrong direction and we end up not answering it as per the requirement of the examiner. So what is very important in the approach is that you should first understand what is exactly the question asking you to dwell upon. First point. Now I'll explain this when I take up one of the case studies of indirect tax. So first is you should read and understand what is the question about. Then comes the second point. Once you know, okay, this question wants me to focus on, let us say, supply, which is our present topic, then you should first interpret or first decode the facts and try to fit it in the requirements of a supply that we will discuss again today. We discussed this earlier also in our regular class, but I'll repeat it today also. Same thing is, let us say, if it is relating to income, if it is relating to a particular head of income, if it is relating to a particular entity's assessment, you have to first, you know what is the question asked. Now the second step is you need to fit the transaction or fit the facts given in the case study into the parameters of that particular chapter. And then comes the third part. In every topic, there are some exceptions, there are some special provisions. The third step is then checking whether any exception or special provision is applicable. Many times I have seen one, our mistake is, as I said at the start, we get drifted by the details. So it could have been a question more dwelling on the GST applicability, but since at the start they had given it from companies law perspective, some provisions or some facts were given, then they dwelled into the accounting standard and accounting treatment. So our mind got diverted to that and we missed the main essence, which is of GST. I'm talking about the multidisciplinary paper. Second is, let us say I understand it is GST, but what happens? We are many times more focusing on the special effects like the exceptions or some special provisions. So we again miss the marks, or we are not able to score marks in toto because we are more interested in going to the special effects or the special provisions which may not be required in that particular question. So it is very important. Step number one, understand what is asked. Step number two, once you have understood what it asks, it is relating to which topic, which section, fit the facts into that topic, into that section. And once you have analyzed that, then only try to apply the special effects or the special provisions. Don't directly jump to the special provisions. Right? Now, this what I've just explained, I'll try to explain it even with the help of one practical example, or I'll say with the help of a case study type of question that you are expected to get in the exams, right? Now, see, I'll take this second question first, just to give you a feel. So, what is given? Mr. Kanjilal Adani is an oil exploration and production contractor and is registered under GST in the state of Gujarat. He entered into a production sharing contract with government of Gujarat, wherein he gets a license to explore, exploit, and sell the petroleum crude and or natural gas from the government in Alibet oil field in lieu of royalty and a share in profit of this petroleum. In the month of June, Kanjilal Adani explored the petroleum reserves at Aliyabet oil field. He got a portion of the petroleum silt, which is not taxable under GST, worth 3 lakhs as part of compensation. This petroleum silt is part of cost petroleum as per the contract entered with the government. Now comes the main point. Now see, when you are reading only this, your mind may be wandering to many of the things. One is your mind may be going to the production sharing contract. Second, since it is mentioning about petroleum and it has already mentioned that this petroleum silt is non-taxable, you are going to the charging part which says that five petroleum products are outside GST. But all this is only the data. What is important is firstly understanding the question. What is the question about? Examine the taxability of petroleum silt. Now, it is already mentioned here that it is not taxable under GST. Then what taxability they want you to analyze? So read further. It says that examine taxability of petroleum silt received by Kanjilal Adani under the GST law. Now what is important is he has got this petroleum silt as a part of compensation. So what is very important is petroleum silt, which is already mentioned here as non-taxable. Why still they are asking you about the taxability? Because here petroleum silt, if you understand this, is not what he has sold. In fact, it is what he has received as a part of his compensation for whatever is his supply. So here the supply is not petroleum silt. Petroleum silt is rather the consideration or the compensation. And what you are receiving as consideration need not be taxable. What you are supplying is what is taxable and what will have tax effect. So when we are talking about this, you see how tactfully the question is drafted. It is saying explain the taxability of petroleum silt. Till this, if I read up till here, we are getting an impression we have to talk about taxability of petroleum silt supply. No, you are not supplying petroleum silt yet. We are not talking about the supply. It is already mentioned here above in the question itself. It is not taxable. What is important is you have to talk about the taxability where this is received by you as a consideration against supply of something. So this is what I was emphasizing on how to read the question. So first is understand what is the question. Don't get carried away by all these facts like production sharing contract or petroleum and natural gas, which is outside GST. Don't get carried away by this. First, read the question carefully. Understand what exactly is question focusing on. Many times I have seen student read partly, they read like this, okay, examine the taxability of petroleum silt, and they are somewhere, their mind gets locked here. They are not reading further. They are reading this question as if we have to talk about the taxability of supply of petroleum silt. But that is not correct. So this is what I am saying. We have to be very, very particular when we are reading the question. Because until and unless you understand the question properly, you will not be in a position to give a right answer or understanding. So this is what I thought that before I start with my deliberation, let me give you a perspective. Now, when I come to our first topic of deliberation today, that is supply. Now, please understand when we are talking about indirect taxes, be it customs, be it the earlier excise service tax, or by today's GST. What is the first most important thing students you should always keep in mind and always be very vigilant and very open when you're reading a case study is that indirect taxes are transaction taxes. Now, what do I mean by transaction tax? It means that, see, when you see income tax is not a transaction tax. Today, you sell something, there is no income tax liability on that one transaction. Income tax liability is on your annual net income, and it may turn out to be a loss, and you may end up not paying any income tax. So, the difference between income tax and GST is GST is a tax where you have to check each transaction independently, like how I read that case study. And in that, we were supposed to only talk about one part of the transaction, that is where petroleum salt is received as a compensation. So, since GST or any indirect tax is a transaction tax, what is very important is you have to check, you have to analyze the transaction independently without looking at anything else done in the business. Because my answer for each transaction will be different. In the same business, my answer for one part may be okay, it is taxable at full rate. For other part, it may be that it is non-taxable. For another part, it may be that it is exempt. So within the same business, I may have multiple transactions. So it is very important that we have a correct perspective. Now, let me start with something about supply. So, as we all know, in GST, the taxable event or the transaction on which tax has to levied is supply. But what is supply? See, supply is a generic term. Supply per se has no meaning. Please understand this. Supply is an artificially coined concept. So, if you want to understand, like manufacture has its own meaning, sale has its own meaning, supply has no meaning of its own. Supply is a word which has been assigned a specific legal meaning. Understand this. I hope you understood this sentence of mine. That when I'm saying supply is a specific term which has been coined for the purpose of GST law, and it has been assigned a special meaning under the GST law. By this, what I mean is that supply cannot be understood in the common parlance. Supply cannot be understood by a general meaning. Okay, if you go to dictionary and try to find out the meaning of supply, no, it cannot be understood. But this is not the case with manufacture or sale because they are having a specific meaning, specific, you can say, identity of its own. Supply has no such identity. Now, why I am emphasizing on this? So that you can understand that what is supply has to be understood strictly within the parameters of the law itself. You cannot go outside the law to understand what is supply. Now, when I say you have to understand it strictly within the parameters of law, then comes a question ki how to understand supply. So the answer is, if I have to give you one single one line answer, then I always say that what is supply if you want to understand? The answer is simple. Supply in general, or if I have to give you a simple one line answer, is any commercial transaction. So the first meaning, if I can define supply in a very shorter sense, is supply means a commercial transaction. Now, when we say supply is a commercial transaction, now what does this mean that supply is a commercial transaction? This is now what we have to decode and what we have to understand by referring to the law. Now, there are steps in understanding or decoding, or I'll say applying this concept. So, what are the steps? First, check whether there is a transaction. So, the first step is there has to be a transaction. Without transaction, there can be no supply. So, your first step will be check if there is a transaction. Yes. Once there is a transaction, now you will first apply Schedule 3. What is Schedule 3? Schedule 3 deals with those transactions or activities which will not be treated as supply. So you'll first apply what is given in Schedule 3. If the transaction that you have entered into is fitting in any of the parameters of Schedule 3, it is gone. But let us say it is not fitting in the parameters of Schedule 3, then you will proceed and now you'll apply Section 7(1), which is the general plus special meaning of supply. Now in this, you have the main definition under clause A. And then from clause AA, you have all the special meanings. So you have to check whether you satisfy the criteria, the conditions of clause A. This is the general meaning where 90% of the transactions are covered. Or you have to check if you are fitting in any of the other clauses. These are the special scenarios of becoming a supplier. Now, if you are not fitting in any of these things, if neither clause A or any of these special cases you are fitting into, again, it is a no supply transaction. Please understand. So if you fit in Schedule 3, that is expressly no supply. And if you do not fit in any of these clauses, that is also a no supply. Because in order for anything to be a supply, it has to pass the test of 7(1). If you are not fitting in any of the meanings of 7(1), whether clause A, AA, B, C, then you are not a supplier. If you pass any one of the tests, it means it is a supply. But wait, it may still not be a final taxable supply. So now you have to test the taxability. So we have just concluded it is a supply. Now you have to test the taxability. Now to check the taxability, you have to first check the nature of supply. By nature, I mean whether it is supply of goods or it is supply of service, or whether it is, I should mention only, a composite supply. And once it is a composite supply, again, out of this, what it is. Now, when I'm saying composite, just read mixed also. Once you have determined the nature of supply as to whether it is supply of goods, service, then the next part in the nature of supply you have to determine is whether it is an interstate or an intrastate supply. And then on the basis of this, you have to check whether it is an exempt supply. If exempt supply, it is a supply, but there is no tax. Why? Because it is exempt. But if it is not exempt, then it will finally become a taxable supply. And once it is a taxable supply, you will proceed with the next part. That is, you will determine whether it is supply of goods or it is supply of service, etc. I hope this is clear to everyone. So this is how, according to me, you decode and you apply the concept of supply. So once it is taxable supply, then you will go to determine the other things. One is the rate. Then one is that is rate means classification, where it should fall. On the basis of classification, you determine the rate. Then you will determine who has to pay tax, whether it is under RCM or FCM. And then you will determine everything like time of supply, value of supply, etc. So please understand this sequence. Please apply the sequence. So first step, again, I come back is transaction. Like again, I come to the same example which we just read. That what is the transaction? Is the transaction supply of petroleum silt, or petroleum silt was received but the supply was something else? So until unless you rightly decode the transaction from the data given, all other steps will be waste. all other steps may go wrong. So this is very, 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 very important. I hope this is clear to all. If anybody wants, you can take a screenshot of this, because since I'm using the screen writing tool, I'll have to rub out this so that I can proceed further. So if anybody wants, you can just immediately take a screenshot of this. Fine. I'll just rub out this, otherwise it will create a disturbance as because it will be there always on the screen. I'll just rub out this. Fine. One second. If by chance anybody's left out, you can just okay. So now let us proceed with what this chapter is all about. So the chapter is understanding supply under GST. As I said, what is supply? That is a legal concept. It is an artificial concept created by law, but it is the taxable concept under GST. So under GST, tax is attracted if you fit into the parameters of supply. Now, here, what are the conditions of 7(1)(a)? So the 7(1)(a) conditions which determine what you are doing, whether it is supply or not. Now, I'm going as per the sequence of this because we are revising, but I've already given you the sequence in which you have to apply the provisions. So firstly, 7(1)(a) is explained here. So firstly, there has to be any transaction. Now, what is this transaction? The transaction can be sale, the transaction can be renting, the transaction can be barter, the transaction can be licensing. So there has to be some transaction. Then this transaction should be either of goods or of services. So what you should have sold, what you should have given on rent, what you should have given license of, that should be a goods or a service. So it means you have to satisfy the test of being a goods and being a service. If your item is neither goods nor service because it is not fitting into the definition of both, then again it cannot be a supply. Next requirement is this transaction of supply should not be free. It should be in return of something. Now, what is very interesting is whether this is adequate consideration or it is inadequate makes no difference when we are determining whether it is a supply or not. Means what? Even a transaction at rupee 1 will satisfy this test of consideration. Yes, it is inadequate. That will be tested and that will be taken care of by the valuation part. But at least it will become supply and this particular condition can be said to be satisfied. So you should get something in return. Please understand this. That something in return may be appropriate, may be adequate. That is a different matter. That valuation chapter will test. So you cannot, when you are determining whether the transaction is supply or not, and when you are applying the test of consideration, you cannot go into the adequacy of that consideration. Yes, we also know that there are exceptions to this. Those are the special cases of supply where 7(1)(c) read with Schedule 1 has listed out few transactions which you will consider as supply without fulfilling this condition of consideration. But except these transactions, for all other transactions, you have to check whether there is consideration or not. Now, let us say when you are applying the concept of supply in a case study to determine whether there is a supply or not, go step by step. First, see what is the transaction. Then, whether there are goods or service involved, or what is the goods or service involved. Then, if you are getting positive answers, yes, there is some transaction, then goods and services are involved. Next, check if there is a consideration. If your answer is no, there is no consideration, then wait and check if you are fitting in 7(1)(c) or Schedule. Now, what happens many times, since we know this Schedule 1 list, And if anything resembling to Schedule 1 is given, like some transaction with related party is given, you may directly jump to Schedule 1, but that is wrong. I repeat, any transaction with related party, you cannot go to Schedule 1 directly. Why? Because Schedule 1 you will go only when there is no consideration. If let us say in the question the transaction is with related party, but there is a consideration, you cannot say I am applying Schedule 1. That is where your answer will be wrong. See, in exams, especially in case study type of questions, your final answer does not carry the complete marks. What carries the complete marks is your reasoning. So if you're in your reasoning, if you have given Schedule 1 as the reason for treating it as supply, it is wrong. But why this happened? Because what you did when you were reading the question, the some data which was given was resembling to related party, and you jump to the conclusion that okay, it is a supply as per Schedule 1, your answer will be wrong. That is why I said keep first understand the question. Let us say the question is about determining taxability, determining supply. Okay. Now, when you're applying the supply provisions, go step by step. Don't directly jump to any special provisions or the exceptional provisions. First, go step by step. Because only merely because the data involves something relating to related persons, if you directly jump to Schedule 1, your answer may be wrong. Keep this in mind. And then third comes the requirement of it being a commercial transaction. It means it should be in the course or furtherance of business. Now we all know business has also been defined, and it has been defined very expansively, whereby not only what is done regularly, that is trade, commerce, or provision of service, but besides this, those things which are done like wagering, those things which are done like something which is an adventure in the nature of trade commerce. See, these are not normally business, but these are also considered as business. Then they are saying anything which is ancillary or incidental to this is also business. Then they are saying whether it is a single transaction, whether there is regularity, whether there is profit intention, all these things make no difference. So even one transaction can be business when if it is in the nature of trade commerce. Even a transaction which is not done regularly, or even a transaction where you are not having a profit motive, still it will be business. So the definition of business is so expanded. So you can very well comfortably treat a transaction which is a commercial transaction as a transaction which is in the course or furtherance of business. Correct? Now, once you have understood this, once you have applied this, and if you get the answer as positive, you will proceed to say that yes, it is a supply, and we can proceed to determine the taxability. But if any of these conditions are not fulfilled, like if it is not goods, if it is not service, answer is it is no supply, game over. If it is not a transaction where consideration is involved, still you have a chance of checking Schedule 1. It may still become a taxable, it may still become a supply. But if again business is not there, like you are selling your personal household items, those sales are not considered as a commercial transaction. They are not considered in the course or furtherance of business. Then in those cases, again, there will be no taxability. It will not be a supply. So only for consideration, there is a carve out given. For other transactions, there is no carve out given. Understood? Okay. So it is further given, while these parameters describe concept of supply under circumstances, transactions have been deemed as supply even when supply is made without consideration. We have discussed that. Now, going further. So besides some specified transactions activities, which are neither treated as supply of goods nor as supply of services, means what? They are talking about Schedule 3. And second, they are saying certain activities have been categorized. I will use the word classified as supply. This is they are talking about Schedule 2. So Schedule 2 is a schedule with the help of which you will be able to decide whether your transaction is supply of goods or service, but that is the last step. Our first step is checking Schedule 3. Then the second step is applying the definition of supply 7.1 with all its clauses. And if you satisfy all these things, then only you'll go to Schedule 2 to determine whether it is supply of goods or supply of service. Now, let us go to details of all this. So, what is supply? So, supply is where consideration is involved and there is some transaction. So, here supply you should read as transaction, and it should be in the course or furtherance of business. Then second it says supply where the person is not an individual and the supply is happening between this person with its members. So like a company with its shareholders or an association or a club with its members, then that will also be deemed to be a supply. Now I'm sure you all remember we had done a detailed discussion of this when we were discussing this chapter, that this has come as in the form of clause AA 71 AA, and this has come to override one of the judgments in the case of Kolkata Club. So now where an unincorporated body or a club is dealing with its own members, that will also be deemed to be a supply. Now why this particular point is important? Because here a club and its members are not regarded as two distinct persons, and there is an implied requirement that there has to be two distinct persons. Now when there are no two distinct persons, this is the challenge, right? Shouldn't just give me a minute. Yeah. Then comes the next clause, 71B. It talks about services which are imported. Now, for importation of service, you also have a reference in other clauses like you have in Schedule 1. But this clause deals with what? It says that importation of service with consideration whether or not in the course of business. Now, what is important is why they have carved out an exception over here, because the general rule under 7.1a requires that every transaction will be a supply only if it is in the course or furtherance of business. Now, for importation of service, they have carved out an exception saying that even if it is not in the course of business, still it will be a supply. So this is again a special case that even without satisfying the business condition, there can be a supply, but this is only if it is import of service. So this is how you can keep it in mind, that the business test has been relaxed only for one scenario, that is for service import. And then comes the second exception, which is without consideration, which the list we are going to see in Schedule 1. Then comes the next part, activities transaction to be treated as supply of goods, supply of service. This is our Schedule 2, that is the classification. And then you have Schedule 3. So this is how the entire supply concept and definition has been coined. Fine. Let us proceed. Now we go to each of these things in detail. So the first basic condition, the generic condition is under 7(1)(a). What it requires firstly that there has to be some type of transaction. Now see, you should not be carried away by these words because the definition itself is inclusive. So these are only examples of what types of transactions could be there. So that is why I call this as commercial transaction. So firstly, there has to be some type of commercial transaction. Secondly, it should be for a consideration. And thirdly, it should be in the course or furtherance of business. Right? Okay. Then comes the next part. The next part requires is that even in case where the persons are not different, like the association or clubs entering into transaction with their own members, even though they are one and the same in the eyes of law, still we are going to treat this as supply because of 7(1)(a). And then for importation, we already saw whether or not it is in the course of business, still it will be considered as supply. Then comes the list of 7(1)(c), that is Schedule 1, where the transactions would be deemed to be a supply even without consideration. Now, this list is important and you have to pay attention to this because these are those special transactions where supply would be attracted or supply would be triggered even without consideration. Now, what is the requirement? Pay attention. The first requirement of this is that in first entry, we have to check whether the item is a business asset. Now, what is a business asset? In simple words, what is appearing in the balance sheet of business? So what will not be a business asset? It means whatever are your personal belongings or household belongings, they will not be a business asset. Second requirement is whenever you had purchased this, you have availed the ITC. So if ITC has not been availed, again, this entry is of non-applicability. Now, once the first two conditions are satisfied, that it is a business asset and at the time of purchase of this business asset, ITC was availed. Now, what is happening? See, we are talking about transaction where there is no consideration. Now, what is this transaction where there is no consideration or why there is no consideration? Because you have permanently transferred or disposed. Now, what does it mean? You have donated this asset. You have just, you can say, in case of medicines, what happens? After expiry, when the medicines cannot be consumed, it cannot be sold. What I will do, I will throw away. I will destroy. So if any of these things you have done and it is permanent, so it cannot be taken back, then it is without consideration because obviously there will be no consideration involved in any of these things. They say that if these three conditions are satisfied, it is a business asset, you have taken ITC on its purchase, and now you are giving it away permanently without taking any consideration like by way of donation, by way of gift, or throwing away or destroying, then that will also be a deemed supply. Correct? Then comes the most important one in this, where the transaction is happening between either related parties or between distinct persons. Now, who are distinct persons? You have multiple registration, all are under the same PAN. So the company is same, the person is same, but the person is existing in multiple states from where the person is doing business. So as per the requirement of the law, the person is required to take separate registrations in each state. Now, when the person is taking multiple registration in different states or in the same state, the person is taking multiple registrations, the person is said to be a distinct person in the eyes of the GST law. Now, in this particular case, the person will be called as a distinct person or treated as a distinct person in the eyes of GST law. Now, when any of these entities they transact between each other, now since all are my offices, all are my businesses, definitely the transaction will be without consideration. But the law says that when one distinct person is interacting with another distinct person, whether it may be for goods or for service, it means they are giving or taking goods or service. In such a case, even though no consideration is involved, it will be regarded as supply. Second thing, what is covered is where the transaction is happening between related person. So if one related person, like let us say a company and its directors or a partnership firm and its partners, if these people are dealing with each other, even though the transaction is without consideration, it will be considered as a supply. But as I mentioned at the start, when a transaction between them is happening at rupee 1, then you cannot fall in schedule 1 in this entry. Then it will be a supply as per 71A. Yes, valuation will be attracted to determine the correct value, but it will be a supply not as per schedule 1, not as per 71C, but as per 71A. This reasoning part is very important. Now, in this special scenario, there is one carve out that where the related persons are employer employee. And most important here, the arrow is going from here to here. What is this arrow? Where the employer is giving a gift to the employee, and the gift is up to rupees 50,000. Now, this 50,000 is for each employee. So it is not 50,000 total gift given by the employer to all employees combined. It is 50,000 per employee. So where in a year, the employer is giving a gift to one employee, and in a year, the value is not exceeding 50,000. That is given as an exception to this rule. It means it will not be considered as a deemed supply. There will be no GST applicable. Then comes another special case of deemed supply, that is where the transaction is between an agent and a principal. Now it can be anyways, it can be principal sending goods to agent and agent then further selling it to a third party, or agent first purchasing from third party and then sending to principal. It means it can be from principal to agent or from agent to principal, both are covered. But what is very important to note here is this covers only goods. It is not covering service. Second most important thing is that here where agent is selling the goods to outsider, these goods are on behalf of principal, and what the agent is doing, the agent is issuing invoice in his own name. So agent is informing the customer that, see, I am selling you goods of my principal, but the agent is issuing his own invoice. So this deemed supply is attracted between principal and agent only when the agent is further selling the goods to outsider by making invoice in his own name. Similarly, where agent is supplying to principal, this is a deemed supply only if while purchasing from outsider, the agent is purchasing the goods by taking the invoice in his own name. So what is very important is first the agent is buying the goods by taking the invoice in his name and then he is further sending it forward. Then only it will be a deemed supply. Then what is not a deemed supply? Let us say in this same scenario, the principal sent goods to agent and agent is now selling it to a third party. But while selling it to third party, the agent is giving invoice in the name of principal only. It means though the goods are moving or being given by agent to third party, but while preparing the invoice is prepared in the name of principal only. Then this transaction is not a deemed supply between principal agent. But where the agent will be giving the invoice in his name, then this transaction is an independent supply. Hence, this is also treated as an independent supply. This is the logic. So when this will be a deemed supply, that comes with a condition or with a rider. That is what you need to remember. And then comes importation of service. Now for importation of service, we already had a condition above. Here there is one more condition. What is that condition? That if I have a related person who is outside India, that person is giving me a service. So in short, I am importing a service from my related person. What is important is this service should come to me in the course of business. Even though it is coming without consideration, it will be deemed to be a supply as per this clause. So for import of service, what are the different case scenarios? The first case scenario is there is a consideration for import of service. It is happening in the course of business. It is a supply, but it is a supply as per the general rule because all conditions are satisfied. Second, import of service is for a consideration, but it is for my personal use. Why personal use? It is not in the course of business. It means I am importing some service for my personal use. In this case also, it is a supply, but it is a supply as per 7(1)(b). That is a specific provision. Next is where it is without consideration. It means I am importing a service, but it is free. There is no payment. Now, in this case, if it is imported from a related person or my distinct person who is sitting outside, and it is for my business purpose, not for my personal use, it is a supply, but now as per 7(1)(c), read with Schedule 1. So import of service can be a supply in these three scenarios. But if I have imported service free, that is without consideration, and it is not coming from my related person, or it is coming from my related person, but it is for my personal use, that is, it is not in the course of business. It means when all these conditions are not satisfied, then only it will not be a supply. So in these three scenarios, import of service will be a supply. So in short, import of service becomes a supply in all the scenarios given in 7(1). That is by regular case also and by special cases also. That is what is important about import of service. But it is coming with some conditions, with some riders. That is what you need to focus. I hope this is clear and understood by all. Fine. Now we come to Schedule 2. Now what is Schedule 2 for? Schedule 2 is for determining what will be treated as supply of goods, what will be treated as supply of service. Now for determining what is supply of goods, what is supply of service, we have to check Schedule 2. Schedule 2 is, you can say, the classification schedule. So what Schedule 2 does? Schedule 2 helps you in determining the nature of transaction, that is whether the transaction should be called as supply of goods or whether the transaction should be called as supply of service. Now, when we have to determine this, that is the nature of transaction, whether supply of goods, supply of service, what does Schedule 2 says? Now, for this, I will classify the transaction into transaction of movable items. So you can call it as goods. Transaction of immovable items. Then intangible items. Then softwares, right? Now, the answer for this and this is same. What is same? Where what you are transferring is the complete rights, that is the title, that is the ownership in your goods, or you are transferring the complete rights, title, ownership in that intangible asset. What is that intangible asset? We call it as IPR, intellectual property rights like patent, trademark, copyright, etc. So when complete ownership is transferred, then that transaction is supply of goods. But where you are not transferring the complete ownership, title, rights, what you are doing is you are giving only the rights to use, rights to display, right to keep it, right to show it off. but not the title. So where the transaction is done without transferring the title or ownership, but you are giving the goods to someone, you are giving your intangible assets to someone, then it will be supply of service. So where this point is missing, title, then it is supply of service. Now, what is very important is the title may transfer today, or I may have entered into an agreement because of which the title will transfer in future, like in case of hire purchase. In both cases, it is supply of goods. So there is no condition that the title should transfer today, but my agreement should be such that my intention should be to transfer the title. Then it will be supply of goods, otherwise supply of service. But when we come to immobile property transaction, it will always be supply of service. So immobile property transaction means transactions relating to land and building. Now in this, if it is sale, then anyways it is schedule 3, we all know, so it is not a supply. But other than sale of land building, where it is construction, where it is renting, leasing, etc., etc., that is wherever you are dealing with immobile properties and it is not sale of land building, because there is no supply because of schedule 3. Everything else in land and building will only be supply of service, because land and building cannot be goods. Then comes software. In software there are two possibilities. One is a standardized software and the other is a customized software. So whenever you are dealing with customized software, so what you are doing of customized software, you are making the software for someone. So whenever you are making a software for someone, it is always a supply of service. Now in standardized software, again there are two possibilities. First, if you are giving the complete title in the software, like I'm selling you the tally, it is completely yours, you can use it as you like, it is supply of goods. But where I'm only giving you a right to use on some subscription basis, which may be monthly, annual, 2 yearly, 3 yearly, like in case of Quick Heal or any type of these softwares. You never buy the software, the Quick Heal software. You only get the subscription to use it for some time. That is supply of service. So in case of standardized software, there are two possibilities. Complete title in the software is given, then it is supply of goods. Only right to use the software is given, it is supply of service. But customized software, it is always supply of service. So that is what you will find over here. Then there are some special scenarios besides this. What are those special scenarios? So the special scenario besides this is wherever you are doing any treatment or process, what is important? On goods which belong to some other person. So they are not your goods. So I have given you my goods and I have asked you to do painting on that. So wherever you are doing some type of process, some type of activity on the goods which belong to somebody else, then it will always be service. Generally, we call it as job work, right? So understand and remember this. So wherever you are doing some activity, some process on goods which is belonging to somebody else, then it is supply of service, right? Then comes the next scenario, that is where you are transferring your business asset. Now again, where the business asset is transferred permanently. Permanently is what? So that no longer it will form part of your business, then it is supply of goods. But where it is only given for use, it is only made available to some other person for use, but it is not given completely, then it is a supply of service. Please understand these small differentiations that are made in this particular case. Okay. Now, if you are transferring the business as a whole, what do you mean by transferring the business as a whole? So it is a running business. You are not selling an asset in the business. You are giving the whole business as it is. So till now, Till date today, I was running the business. Now I am giving it to you. Now you will be running the business. This is what is supply of service. So where the business as a whole is given away, it is supply of service. Then here you can see renting of animal property, it will be service. Construction will be a service. Then temporary transfer of intellectual property rights, that is not giving the complete ownership, is also a service. Then developing, designing, programming, or customization of a software. This will all happen in case of customized software where you will be developing, designing, programming. And in case of standardized software, what maximum you will be doing? You will be doing some upgradation or enhancement or adaptation. All these are services. So you have to understand when the nature of transaction will be classified as supply of service and when it will be supply of goods. Now in this, what is important is this category, which is composite supplies. Now in composite, we have a concept of composite supply versus mixed supply. Before you go to that, two composite supplies are already given in Schedule 2. What are those two composite supplies? One is the works contract and the other is restaurant, catering, that is supply of goods. What is that goods? It is food or any article which is for human consumption, or it is a drink. So when any of these things are given as a part of serving it, then we call it as restaurant, catering, etc. These two composite supplies are always service. Other than these two composite supplies, any other supply where two or more things are given together, then you have to check whether it will be called as a composite supply or mixed supply, and accordingly you will apply the provisions of section 8. So understand and remember this differentiation. Now before we go to that part, let us first see what are the Schedule 3 transactions. So Schedule 3 covers those transactions where there will be no GST applicability. So first is where employee is giving service to employer. It is always, that is a job or the salary is always outside GST. But what is important to be noted is where employee is giving to employer and it is in the course of employment. Now it may happen that employee may be giving any service in some other capacity, like as a consultant, like as a professional. That will not be falling in Schedule 3, it will be a supply. But where the employee is giving anything in the capacity of employee, that is in relation to employment, what we call as job or salary, or in very simple words, where TDS under section 192 of the old Income Tax Act, that is Income Tax Act 1961, where TDS is deducted under 192, that is what is salary and that is what is outside GST. Next, any fees that you are paying to courts or tribunal, that is also outside GST. Next, where any functions are performed by members of parliament, again in their capacity as members of parliament or in the capacity where they are holding some post or position which is given to them by constitution. All these services are outside GST because they are considered as neither supply of goods nor a service. Similarly, where after death you perform any of these rituals like either burial or crematorium, that is either we burn the body or we bury it down, all these things are not leviable to GST. Similarly, before you perform any of these things, if the body is kept in the mortuary or you have to transport the body, even these are not liable to GST. Then sale of land and sale of completed building is outside GST. And all types of actionable claim. Now you have to remember actionable claim is covered in the definition of goods, but if the transaction is of actionable claim, except specified actionable claim. And what are specified actionable claims? They are lottery, betting, online money gaming, casino. All these are specified actionable claims. Except these specified actionable claim, all other actionable claims transaction is outside GST. It means only the transaction of these specified actionable claim, which is goods, is only taxable under GST. All are outside GST. Then some special business transactions have been kept outside GST. What are they? So first is where the transaction is such that you are sitting in India, but you are buying goods from one non-taxable territory and the goods are sold to another non-taxable territory. So it is an out and out transaction. And most important, these goods do not come into India. So example, I buy from Bangladesh and I send it to US directly. So let us say right now we are having the tariff issue. So if I send something from India, it will attract a very high tariff. And let us say US has given some relaxation to Bangladesh. So what I do is I purchase from a person in Bangladesh and I ask him to directly from there send it directly to US. So where I'm doing this transaction, it is called as an out and out transaction. The goods are not coming to India, they are directly going from Bangladesh to US. But yes, I'm the person who is doing this. So it is neither import because goods do not come into India. It is neither export because they are not dispatched from India. It is a non GST transaction. It is an out and out transaction. I hope this is clear. Next comes where after import, but before clearance, I have kept the goods in warehouse. Now, until the time these goods are in warehouse, that is, they are not cleared, in the eyes of customs law, the importation has not happened. The importation is not complete. Now, while the goods are within this warehouse, if I transfer these goods before they are cleared for home consumption, if these goods are transferred either while the time they are in warehouse or they are still in the high seas, but before their clearance as per the custom law, if they are sold, then it is also considered as no supply. Next, activity of apportionment of co-insurance premium. Now, what is this? Let us say I, as a lead insurer, I get a very big policy of some big industrialist, and the policy is of 1,000 crores. Now, this is a huge business for me, but it is coming with a huge risk also. Now, at times, if I believe or if I feel that I independently alone cannot handle such a risk, I may add other insurer, that is insurance companies, to become the joint or the co-insurers. Now, in such a case, whatever premium I get, let us say I get 100 crores as the premium for this policy. What I will do, I'll first take that 100 crore being the lead insurer, and then I will divide and share it with the other co-insurers, whoever have decided to jointly be part of this huge policy. So whatever insurance premium I am apportioning or I'm sharing with them, that will not be considered as GST, that will not be considered as a supply. It means all these other joint or co-insurers are not required to pay GST on whatever portion of premium I'm sharing with them, with the condition that I have paid GST on the entire 100 crore insurance. So if the lead insurer pays GST on the total premium, that is on this 100 crores, then whatever, let us say 20, 20, 20, I've shared with the other four, and I keep 20 with me. So this whatever 20, 20, 20 I've shared with them, they don't have to pay any GST on this, provided I have discharged GST on this entire 100 crores. Similar to this, where services are by insurer to reinsurer. Now, what is this insurer to reinsurer? Instead of making the other insurance companies as joint insurer, the second model is I take the full insurance as if I am showing the client that, okay, boss, I am the only insurer. But then after I insure that person, I get myself insured from some other insurance company. This is what is called as reinsurance. So whatever is the reinsurance premium along with the reinsurance commission, whatever I'm going to share with that other insurance company, that is also outside GST. So these are the relaxations given relating to reinsurance and co-insurance. And then comes the last concept, which is the concept of composite supply versus mixed supply. Now, one thing is for sure, when this concept has to be applied, firstly, you will keep two things outside. So works contract and restaurant or catering, you have to keep outside because they have already been classified as supply of service. Except this, all other transactions where two or more items. Now, these may be goods plus goods, these may be goods plus service, or these may be service plus service. So if any of these combinations where two or more items are supplied together in one invoice, that is where we check whether it is a composite supply or it is a mixed supply. And then as per section 8, we decide the taxability. What is the taxability if it is a composite supply? The taxability is of the principal supply. That is, if the principal supply is exempt, entire transaction is exempt. If principal supply is at 18%, entire transaction is 18%. But if it is a mixed supply, then the taxability is as per that supply which has the highest rate. Out of all the items, whichever supply is having highest rate, we tax it at the entire transaction at that particular rate. Now the question is, the taxability given under section 8 is simple. For composite supply, apply the taxability of that supply, which is the main supply or the principal supply. And if it is a mixed supply, apply the taxability of that supply, which is having the highest rate. This is okay. But the question is, what is a composite supply and what is a mixed supply? Because this taxability depends upon whether the transaction is a composite or a mixed supply. So for this, we need to analyze and understand the effects of what is composite and what is mixed. So what is a composite supply? A composite supply is defined where as two or more supplies, most important this word, which are naturally bundled and which are given in conjunction with one another, where one is principal and others are subsidiary. So these two words are important, that they are naturally bundled and where one is the main supply. Where any of this is missing, then that supply becomes a mixed supply. So what are the examples of this? Now it is a Diwali season. In Diwali season, when you go to sweet shops or when you go to many of these malls, you find different offers. Now what are the offers? They make a combo pack, where combo pack is comprising of multiple different items which are packed together as one single. So they have a decorative basket which will having the wafers, which has biscuits, which has some fruit juice packs, etc., put into one basket and made a one beautiful gift pack. Now all these examples are of mixed supply. Why? Because selling these things together in one combo pack is not naturally bundled. What is naturally bundled? Naturally bundled means it should be a common trend. It should be such which is done regularly, which is naturally, means which is such that they are always supplied together. They have to be supplied together. Like here, charger given with mobile phone or remote given with TV or tube and tire. All these are given together because they are naturally bundled. They come together. They cannot be done independently, and one is main and the other is subsidiary. Then it is composite. If not, where all are equally important or where they are not naturally bundled, it is a mixed supply. So this is how you determine the taxability in case of composite and mixed. So with this, we end this topic and we go to the second topic. Before that, we'll just take a 5 minutes comfort break. So allow me 5 minutes. After 5 minutes, we restart. apply? Yes, students. Yes, people who are present. So we discuss supply in totality. Now, if anybody has a question, query, please let me know. No questions? Okay. Now we go to the second chapter for revision. That is the chapter on charge of GST. Now see, when we talk about charge, so we have to refer to the charging section, which is section 9 of the CGST and the SGST Act, and it is section 5 of the IGST Act. Now basically, what is difference? And it is 7 of the UTGST Act. Now what is the difference is, when you read the C and S, they are virtually a replica. IGST is slightly different because it is more catering to inter-state supplies and it has to cater to imports, exports, etc. But otherwise, IGST charging section also is very similar to CNS, and UTGST is obviously similar. Now, firstly, what does both these acts say when it talks about the extent and commencement of these acts? So basically, the CGST and SGST acts, they will apply, like the CGST will apply to entire India. Obviously, IGST will also apply to entire India. But when we talk about SGST, SGST will apply only to the state to which that SGST belongs. Now, what is very important in the GST law to note is, in GST law, those union territories which are having parliament, like best example is Delhi. So Delhi is actually union territory, but we always refer to it as a state. So wherever a union territory is having a parliament, it is having its own chief minister and entire cabinet of ministers. That is where that union territory will not be treated as union territory, but it will be treated as a state for the purpose of GST. Whereas a union territory which is not having a parliament, so which is administered by the central government through the mechanism of president and governor, etc., but it is indirectly managed by the central government only. That is what is treated as a union territory where the UT-GST law is applicable. Correct? So whenever in case of an intrastate supply, the tax will be levied as CGST and UT-GST in case of a union territory without legislature. And if it is a union territory with legislature, it is treated as SGST. So the tax will be levied as C plus S. Similarly, in case of any other regular state, it will be C plus S for all intrastate supplies. Fine. Now comes the main part, that is the charging section. Now, when we see the charging section of the CGST and the respective states SGST, or for that matter, the UTGST Act, what it says, the tax will be levied whenever there is an intrastate supplies. It may be of goods, service, or both. Both is to cover the composite transactions. Now, if you read the subsection 1, it says the tax will be collected and paid by the taxable person, which is nothing but the supplier. And then subsection 3 and 4 deals with where the tax is to be paid by the recipient. Here, it is paid by the supplier. What is important is subsection 1 is making it very clear that in case you are supplying alcoholic liquor and it is for human consumption, this is very important because you may have liquor which may be for industrial use, and there is a very recent judgment also. So wherever the liquor is for industrial use, or now one more thing has been amended and added, that is undenatured extra neutral alcohol or rectified spirit, all this is also outside GST. So two things which are kept outside GST are alcoholic liquor, which is for human consumption, and the denatured spirit or the rectified spirit, or you can say which is industrial liquor. These things are kept outside in the charging section itself. Next, what will be value? That will be as per section 15 only. and the rates will be as notified through notification. Now, when it comes to IGST, the first differentiation factor it says it applies to interstate transactions only. Now, further, the maximum rate that can be used is 20% in case of CNS and obviously 40% in case of IGST. Now, we all know that from 22nd of September of this particular year, that is 2025, they have actually used these rates. Earlier, these rates were not used. The maximum rate levied was 28% in total. Now they have made it 40%. I'm sure you all would be knowing this, but that is not part of our syllabus. Khalid is asking, sir, that means industrial liquor is exempt. See, Khalid, it is not that industrial liquor is exempt. In fact, it is the other way around. We were reading what is not taxable under GST. So industrial liquor is not covered in that list. It means it is taxable under GST. Understand this. So what is for human consumption is outside GST. We were reading what was outside GST. But if it is industrial liquor, which is not for consumption, in that particular case, if it is not for consumption, it is not coming in human consumption liquor, then it will be very much under GST. That is what is important to be noted, except that the denatured or rectified spirit, which has been specifically kept outside. Next, as per section 9.2 and 5.2, these five things are kept outside GST for the time being, but they can anytime be brought into GST. The decision has to be taken by the council. And then you have 9.3, 9.4, 5.3, 5.4, which says that certain transactions, which may be of goods or service, which will be notified by the government, or certain specified categories of transactions where the supplier is unregistered and the buyer or the recipient is registered, these will be kept under RCM. So this is the 9.3 where the list we keep on studying, and this is the 9.4 under which presently only one case is covered, that is the real estate case. And then comes a 9.5. Now what does 9.5 says? In case of some notified services, the tax will be paid by the e-commerce operator, that is by the app through which these services are being supplied. So what are presently covered? Restaurants are covered, hotels are covered, housekeeping services are covered, and your Ola Uber app, that is the passenger transportation is covered. So few of these services which are notified like all these are only covered in 9.5, where the supplier will not pay tax, the recipient will not pay tax, but it is the app, the e-commerce operator through which these services are provided that will be paying the tax. Now, as per 9.3, what are the services which are presently under RCM? So first, most important services where the supplier is a GTA and the recipient is a person which is registered under any law for the time being. So it may be a factory registered under Factories Act, society or a cooperative society registered under Cooperative Societies Act, or it may be any other entity which is registered under some law. So the supplier is a GTA and recipient is one of them. Then such services which are for transportation of goods by GTA is what is covered under RCM. However, now you all know from 2022, to be specific, June 2018, June 2022, GTA is given an option whether the GTA wants to be under forward charge or under reverse charge. And now this option can be changed also, but this can be done once in a year at the start of the year. So now it is saying except where the GTA is going for forward charge. So now the option is with the GTA. GTA can fill the specific application and be under FCM. If not, the GTA will be under RCM. Once it has filled the application and it has shifted to FCM, it will remain in FCM till it again fills the application and gets converted into RCM. All these things have to be done in the month of March before the start of the next financial year. Now, some exceptions where even though you are a registered recipient, still the services will not be under RCM is. So the service is provided by GTA and you are a registered person. But who are you? You are a department or establishment of any of the governments or your local authority or your government agency. So in short, you can say simply they are government. And what is more important is they are registered, but their registration was done because they are required to do TDS under income GST, not income tax, sorry. So where these government bodies have got registered only because they are supposed to do TDS, hence they have taken registration, then GTA services will not be under RCM, it will be under forward charge. Otherwise, GTA services to any registered person which is registered under any law or even under the GST law will be under RCM if the GTA has not opted for FCM. For partnership firm, it may be a registered or an unregistered partnership firm. In both cases, it can be under RCM. Then comes the next service, again very important, where the service is a legal service. Now, two things are important for this to be under RCM. One, it is a legal service. Second, the service is provided by an advocate or a firm of advocates to a large business entity. Now, I am saying large, though the word is not used here, but when you read parallelly the exemption notification, it says that firstly, where an advocate provides services to a non-business entity like individual who is taking the legal service for personal use, it is anyways exempt. And where it is providing to a business entity whose turnover is below the registration limit, which is of 20 lakhs, 40 lakhs, again, that is also exempt. That is why I'm using this word large business entity. Only where the GTA, only where the lawyer or law firm is providing service to large business entity, only then that service is under taxability. Otherwise, the services are under exemption. So lawyer service will be under taxability except these two because these two are in the exemption notification. And where it is under taxability, it will be under RC. However, there is one scenario where a senior advocate is giving services to other advocates, which may be senior or not senior, but the provider of the legal service is the senior advocate. This is the only scenario where the services of the lawyer is under forward charge. Otherwise, the services of the lawyer is always under reverse charge. Next, services are given by the arbitral tribunal. Now here, again, it is given to a large business entity, same logic, same exemption like legal service are here. That is when it is given to non-business entity, it is exempt, or when it is given to a small business entity, it is exempt. Other than these two, where it is given to large business entity, it is taxable and it is taxable under RCM. That is, the tribunal is not required to pay tax, but the recipient of the service, that is the business entity, has to pay tax under RCM. Then comes sponsorship service where there is small amendment. When the sponsorship service will be under RCM, where the provider of the service is a person other than a body corporate and the recipient is a body corporate or a partnership. Only when this is satisfied, the services will be under RCM. So what are the two conditions to be satisfied? The provider is any person, but not a body corporate. So if the provider is a body corporate, it will be under forward charge. Recipient should be a body corporate or recipient can also be a partnership firm. In either case, it will be under RCM. The next is services given by government. Now, again, when we talk about services given by government, similar to lawyer, here again, you have to read it as large business entity. And what is important to be noted is services given by government other than those which are specifically exempted under exemption notification. That also you have to keep in mind. Further, few of these services by government have been specifically kept under forward charge. What are they? Renting of immovable property. There is a separate entry, we'll study that. Then services given by the Department of Post or by Ministry of Railways. This is also under forward charge, hence it has been kept outside from here. Next, where the government is giving services in relation to aircraft or vessels, or where the government is giving services of goods or passenger transport. These are all kept outside RCM. These are the services where the government itself is liable to pay tax if it is taxable under forward charge. Now, this service is important. Rather, both these services are important. Firstly, renting by government. Here, Ministry of Railways is not covered because it is under forward charge. Other than Ministry of Railways, where the government is giving any immobile property on rent, this service will be under RCM if the recipient is a registered person. If the recipient is unregistered, it will be under forward charge. Next, these two are other than government renting services. So let us say you and me are giving any property on rent. Then what is the scenario? First, if the property is a residential property and it is given on rent, so a residential property is given on rent to a registered person. Firstly, if it is given to an unregistered person, it is exempt. So residential property given for residential use and the recipient is unregistered, it is exempt. But if the recipient is registered in the hands of the property owner or the landowner, there is no GST, but it will be payable by the recipient. Now here, there are some clarifications. What are the clarifications? That let us say the recipient who is registered is an individual, but the recipient is taking it for his or her personal use, no GST. It means only where the individual who is a registered person is showing this rental expense as its business expense in their P&L, only then this RCM will be applicable. Otherwise, it will be a exempt service. Second, where you or me are giving an immobile property which is not a residential property on rent. So in short, we are giving a commercial property on rent. Now here, the difference as compared to residential property is in residential property, giver can be any person, maybe registered or unregistered, but the recipient should be registered. Here, the giver should be unregistered. That is also a condition, and recipient should be registered. So condition is both sides. The giver unregistered, receiver registered. Only then RCM is applicable. Here, if the giver, that is the landowner, is registered, it will be under forward charge. And you all know there is no exemption for renting of commercial property. The exemption for renting is only for residential property. So where a commercial property is given on rent and it is given by a registered person, it is under forward charge. If it is given by an unregistered person to a registered person, it will be under reverse charge. Here, a carve out is given where the registered person is a composition dealer. If a composition dealer is taking the property on rent, it will not be covered under RC. Correct? Now, these two entries, 5B and 5C, are specifically in relation to real estate transactions. So where a builder, who is over here called as a promoter, has taken any services in the form of TDR or FSI, that is from landowner. So this is basically landowner. So landowner has given the TDR or FSI, or the landowner has given the lease of the land to a builder promoter. Then that lease or that TDR or that FSI given to the builder promoter, the tax on it, the GST on it has to be paid by the builder promoter under RC. Next. Now this is again an important service where the services is given by a director to the company. Now here, there are some important clarifications. First, we have to see under which section TDS is deducted. If the TDS is deducted under 194J for the director's remuneration, only then RCM is applicable. If it is under 192, the TDS, then there is no GST because it becomes salary given to director, because the director may be a full-time director standing in the capacity as employee, then there will be no GST at all. Only where the director is not standing in the capacity as an employee, GST is applicable under RC. Next clarification is, many times a director may be providing services other than as a director. Now here, the language plainly says services by a director. But here you have to read it as services in the capacity as a director. So fair, let us say director is also a professional and is doing some consultancy services for its company. This RCM will not apply. Next, where an insurance agent is providing services to an insurance company, that is a person carrying on insurance business, so an insurance company. So agent is getting the company business by getting them policy holders. So whatever commission, insurance commission the agent gets is outside GST. It will be under RCM, the agent's commission given by the insurance company to the agent. Similarly, where a recovery agent is hired by banks for recovering their outstanding loans, especially the NPA ones, those fees charged by recovery agent to the banking companies and even non-banking financial companies will be under RC. Next, now this is where again we have to be careful. What is the service? The service is transfer or allowing the use of what? Of a copyright. Now, this copyright is relating to what? It is relating to dramatic, musical, or artistic work. So let us say a composer has composed a tune, and obviously the music composer is giving this tune to a music company. Whatever the composer will get as a royalty or as a fees, that is where RCM will apply. Similarly, if there is any artist, photographer, and it is hired by a producer who is making a film or a web series or a serial, then the services of this artist, this photographer, will be under RC. Next comes author service, where author has written a book and it has given the book to the publisher for being published. Now, for such things, the author gets a royalty. Now, here again, there is option same like GTA given to the author. So if author opts for forward charge, this case will be covered under forward charge. If the author is not opting for forward charge, then the publisher of the book has to pay GST under RCM for the royalty paid to the author. The next is where RBI is taking the services of the members who are part of the overseeing committee, that is under RCM, where bank is taking the services of direct selling agents. So where you see you get calls from banks for credit card or getting loans or something. These are all DSAs, direct selling agents, who may be sitting at home or sitting in some one call center and making calls. So all these services where the DSAs are individuals, they are not body corporates or partnerships or LPs, means these are individual persons hired by the banks for promoting their business, and the bank pays them some commission or charges. That is what is under RCA. Next, similar services is where the banks have hired some business facilitators. Similarly, where some business correspondent has hired an agent. So all these are services where people are hiring some agents who are doing business promotion, helping them expand their business. So the services of such business facilitators or agents, which are always in the form of commission, is always under RC. Then another very important service, which is important for exam point of view, is the security agency service. So we see bodyguards, we see all these security personnel being hired. Now, wherever these security personnels are being supplied by a person who is not a company to any person who is a registered person, then RCM triggers. However, the exception is where this registered person is whom? It is a government or government department, and it has taken registration only for the purpose of TDS. So same point what we have seen earlier in GTA also. So where the registration is taken solely for the purpose of deducting TDS, or where this registered person is a composition dealer. So the person has taken registration as a composition dealer. These are the two exceptions where RCM will not apply. It will be under forward charge. Otherwise, where the supplier, that is the security agency, is other than a body corporate, so it can be individual, partnership firm, etc. But the recipient is a registered person under GST, RCM will trigger. Then comes another important service, again important for exam point of view. What is this service? Renting the motor vehicle or the vehicles which are designed to carry passengers and where the cost of fuel is included. Now, what is the difference, students? See, when the cost of fuel is included, this becomes a passenger transportation service. Understand this. And where the fuel cost is not included, in that particular case, it will be only hiring the motor vehicle, which will be like giving an asset on rent. Giving an asset on rent is not covered over here. It is mainly the transportation service which is covered over here. Now, when RCM will apply, when the transporter, that is the supplier of this service, is non-body corporate. And again, same like GTA, who is not going for the forward charge option, that is charging GST at 12%, which is 6% over here. Now, obviously, this will change to 18 after the rate change. But since we are giving January attempt, the new rate changes are not applicable to us. So, where the supplier is a non-body corporate, but the recipient is a body corporate. And again, the supplier has not opted for FCM. Because if supplier has opted for FCM, the matter is closed. And then last one is services of lending of securities. Then besides all these services which are applicable to intrastate supply, all similar services are applicable to interstate supply, with one addition that in case of interstate supply, that is IGST, we have one very important service which is under RCM, that is import of services. So wherever services are imported from outside India into India, and it satisfies the condition of import of service, what is the condition? Recipient is inside, supplier is outside, and the place of supply is inside India. When all these three conditions are satisfied, then only it is an import of service. Such import of service is falling under RCM, where the recipient will be required to pay IGST under RCM. This is the only additional service which is under RCM as per the IGST Act. All other services which we saw above, which are applicable to CGST, SGST, are also applicable to IGST under RCM. Then comes a very important part under GST, which is called as a composition levy. Now, we should not mix between similar words like composite supply and composition levy. So, a composite supply is altogether a different concept than a composition levy. Also, composition levy is different from exemption. Many times people treat composition as an exemption. No, it is a parallel method of levy. Now, what is parallel? Parallel means you have one method which is given in section 9, which is your main charging section, which is the main levy section. As against this, you are given a second method, which is under section 10. Now, what is the difference? See, section 9, you can call them as the regular taxable persons. And section 10 is who are composition dealers. Now, what is the difference between these two? When you are a composition dealer, what happens is you are given some concessions. What are the concessions? You are given simplified procedures. Your method of calculating tax is also simple, where you are given a lower rate, which is called as a composition rate. And this rate is applied on your turnover directly. There is no hassle. You don't have to take ITC. You don't have to set up ITC. So your calculations are made simple. Also, you have to file only one single return in a year. And that return is also not so much detailed like your regular return in GST 1 in 3B. So basically, you are given relaxation in compliances. This is what is composition. So composition is where they have made the procedure simplified. They have made the calculation and payment of tax simplified. But you are under levy. There is no exemption. Composition is not exemption. Composition is simplified procedure. Now, who are covered under composition? So they have basically tried to cover those people who are small taxpayers. Now, in this, there are three categories mates. First, who are supplier of goods. Second, who are into restaurant or catering. And second, who are supplier of services. So broadly, you can say there are three categories who are into composition. Yes, Swaminathan, you are right. So uh, the annual return beta is GSTR 4 and CMP 08 is the form for payment of quarterly tax. So composition dealers have to pay tax using the chalan which is CMP 08 and they have to file annual return which is GSTR 4. Fine, better. Now coming back to the point, now the composition scheme can be classified into three categories. First is for goods, second is for restaurant and catering, and third is for services. Now, these were originally under 10.1. This was later on added under 10.2a. So these are the two schemes. Now, when we are saying goods, it also allowing services, but to some limited extent. And when we are saying supplier of service, it also covers goods. So there is some overlapping. But what is the difference? So majorly where you are supplier of goods, now supplier of goods can be a manufacturer or a trader. So majorly your business is supply of goods. Along with supply of goods, up to a specified limited extent, you are giving services. Then you are eligible for the first composition scheme, which is under 10.1. Or exclusively you are into renting, sorry, not renting, restaurant or catering, you are also still covered in 10.1. Next, where you are not covered here, why? Because your service portion is major. Then you come under 10.2a. Now, when you are having majorly service portion and you are covered in 10.2a, in that, even if you are supplying goods, that is okay. You still remain under composition under 10.2a, and there is no limitation or restriction on the extent to which goods can be supplied. So here there is a restriction to the extent of which service can be supplied to be under 10.1. Here the goods can be supplied to any extent, still you will be under 10.2a. So I hope you understand this. Kindly make a note of this. This is very important. You have to understand and remember this so that you will be able to apply this. Who is this person who is has not put the name and put a dash? It is compulsory for you students to write your name and put your registration. Kindly do this or else I'll have to remove you from this meeting. Who is this person who has not put a name and only put a dash? Yes, I request you to kindly put your name or else I'll have to remove you from the meeting. Yes, student. Manish ji. Sir, there is someone who has not put the name. So should we continue that person or should we remove the person? Manish ji, I'll continue. Let me just check with the person. Yeah. So, Khalid, I'll repeat. So, see, under composition, there are, I'll rewrite this for your clarity. So, under composition, there are two options, students. First is section 10.1, the first composition scheme. Second is 10.2a. Now, the original composition scheme under 10.1, which is from the start of the GST law, was originally made for supplier of goods or for supplier of only restaurant and catering service, which is given in Schedule 2 as composite supply of service. Now, later on, they added this one more category, which we call as composition scheme for supplier of services. However, in this scheme, which is originally for supply of goods, there was a lot of confusion. There was a lot of request to allow services. Why? Because see, even if I'm in the business of supply of goods, I'll give you the simplest example of this. This basically covers businesses like groceries and all, where your business is mainly supply of goods. But even in a grocery shop, you will find that the board or the hoarding of the grocery shop is of some brand or a company from which the grocery shop is taking some rent. Similarly, the grocery shop owner may be putting some items on display in the shop for which the grocery shop owner may be getting some nominal rent. So it was represented to the council saying that if you are making this composition scheme exclusively for goods, then practically it will be of no use because many of these businesses who are exclusively into goods are also providing some services. So to allow them, they made an amendment saying that we will allow some services, but they have given a limit. There is a percentage limit plus there is a monetary limit. If out of total turnover, your services is within the limit, the percentage and the amount limit, then you can continue to be under this composition scheme, which is set for goods. Then when they added 10.2a, which people call it as composition for services, you have to remember that here all those who are not covered in the first composition gets covered here. Now, who will get covered here? Whose business is either exclusively services or whose business is services plus goods, where both are equally major. Like I'll give you an example. Today, if you go to salon, in salon, they are also providing the salon service plus now every salon is also selling multiple items like face creams, some hair oil, some this face packs. So many of these salons are also supplying goods, and that is also a major part of their turnover. Now, since they are not exclusively into goods, majorly into goods, they are not falling in 10 months. They are also not restaurant or catering, but their businesses where originally they are basically a service provider, but they are also having goods. So either they are purely service provider like coaching classes, like small CA firms, they can be here under 10-2A, or where your business is goods and service, where both are substantial, you will be under 10-2A. Now, if you are under 10-1, your turnover should not exceed 1.5 CR, otherwise you will be out of this composition scheme. And if you are here, your turnover should not exceed 50 lakhs, otherwise you will be out of this scheme. So the turnover limits for both composition schemes are different. Now, what are the tax rates? If you are fitting in this, whether it is supply of goods or service, your tax rate is 3% plus 3%. So effectively, you have to pay 6% of turnover. Now, what we discuss here, no composition dealer is allowed ITC. So they cannot avail, they cannot set off the ITC. So 6% of turnover is their final payment that they have to make to the government. No ITC, no set off, no adjustment. Similarly, here, on supply of this, that is goods and service up to the limit allowed, the GST rate is 0.5% plus 0.5%, that is 1%. And where they're into restaurant catering, the GST rate is 2.5%, 2.5%, that is 5%. So for a composition dealer under 10-1, there are two rates, 1% and 5%. Under 10-2A, there is one rate which is 6%. Both are on turnover. However, there is small carve out. If you are a trader of goods, 1% is on only taxable turnover. That is exempted turnover is excluded. But if you are manufacturer of goods and there is an exception list, except some goods, because some goods are ineligible or some manufacturer of goods are ineligible for composition scheme, except those ineligible, 1% is on all turnover. When I'm saying all, it is taxable plus exempt both. So this is something important. And what is very important in this entire composition scheme, any one of them, that if you are receiving interest on your deposits or loans or advances, which is exempt, this will not be considered anywhere in the composition scheme, neither by determining your composition eligibility of 1.5 CR or 50 lakhs, neither while computing your tax of 6% or 1% or 5%. So if you are receiving interest, because see, these are small businesses, they may be, majority of them are individuals or HUF, so they will be having saving bank accounts. They may have done some FDs out of their savings. So they are regularly receiving interest on this deposits, which is exempt under GST law. But as I just explained how these rates are to be applied. So firstly, this interest will not be considered while counting their eligibility turnover of 1.5 CR or 50 lakhs. Also, this interest will not be counted in this turnover while they are computing the tax liability. So interest will be totally excluded from the entire composition scheme. This is what is the point. Khalid, I hope beta you understood this point and your doubt is clear. Khalid, is it clear, beta? Because you had raised a query initially. Clear, beta? Okay. So see what we discussed. The two composition schemes. One is 10-1, one is 10-2A. Now, those who want to come into the composition scheme, what is the procedure given to them? So the procedure given to them is, yes, Swaminathan, if you want to raise a question, I will unmute you. You can raise your hand. I will unmute you. If anybody wants to ask a question, you raise your hand. I'll unmute you so that you can ask the question. Now, How to go into the composition? Now there are two possibilities. First, you are taking a new registration, and at the time of new registration itself, you want to go for composition. Second, you are already registered under the GST law, and every year you are given the option, if you are satisfying the conditions of being a composition dealer, you can opt for the composition scheme. Now, whatever is the reason, the question is how to get into this composition. So first is, if you are taking a new registration and you want to opt for composition, then you have to specify this in your form itself, that is in the registration form. So you have this REG form. In the REG form itself, you are given the option where you can opt for composition. Now, from which date you will be considered as a dealer, composition dealer? That is a date from which your registration becomes effective. You will be treated as a composition dealer. Next, where you are already registered under GST, let us say you are regular. Now, from the next financial year, you want to convert into composition. So there is a form by which you can intimate, and by filling that intimation form, you will switch from regular to composition, and this will be applicable from the start of the financial year. So you can change between from regular to composition, but this will happen only at the start. But if let us say you are already composition and you want to change to regular, there are two possibilities. One, again, you can do it at the end of the financial year so that your category will change and you'll become a regular dealer in the next financial year. Or if you are presently a composition dealer and you breach any of the conditions given here for being a composition dealer, like let us say your turnover exceeds the limit, then automatically from the date of breaching that condition, like the turnover, you will automatically switch from composition to regular. So when you are switching from composition to regular, it can happen in two manners. One is automatically, that is once when your turnover or any condition is breached, automatically you will switch and become a regular dealer, or by exercising the option which is given, you can also switch and become a regular dealer. So from composition to regular, there are two possibilities. So what are the turnover limits? The turnover limits for 10-1 is 1.5 CR, and for special categories, say it's 75. And for 10 to A, it is 50 lakhs. Now, what are the conditions? First, you should not be a casual taxable person or an NRTP. Second, even though you are registered as composition, you still have to pay tax under RCM wherever applicable. Next, you should not be engaged in the manufacture of notified goods or notified services. Presently, there are some goods which are notified. Next, you should mention on your invoices that you are composition taxable person, not eligible to collect tax. Now here the invoice will not be a tax invoice. It will be a bill of supply. Further, you have to mention this in your business place also. You have to put a board that you are a composition dealer. Now, which are the goods which are not eligible for composition scheme? So if you are a manufacturer of any of these goods, now interestingly, if you are a trader of these goods, you are still eligible for composition. But if you are a manufacturer of ice cream, pan masala, tobacco, aerated water, fly ash bricks, fly ash aggregate, or fly ash blocks or bricks or fossils, etc. For all these people, the composition scheme is not available or eligible, but this is only if you are a manufacturer of these goods. Correct? Next, what are the rates? For manufacturer, it is 1% of total turnover. For restaurant, it is 5% of total turnover. And for trader, it is 1%, but only of taxable turnover. For service provider, that is 10 to 8, it is 6% of total turnover. Now, who is not eligible for composition scheme? First, registered person who is not eligible for 10-1. Second, who is not eligible for 10-2. First, supplier who is engaged in making supply which is not taxable to GST, both cases. So example, you are a dealer of alcoholic liquor for human consumption, you are a dealer of petroleum products. Second, the person who is engaged in making interstate supplies. So if you are supplying goods outside your state, composition scheme not allowed. Next, this is important. Person who is supplying any service through e-commerce operator who is required to collect tax. Person who is supplying any service through an e-commerce operator who is required to collect tax. So wherever you are providing services through e-commerce operator, again you are not eligible. Then manufacturer of all these goods, and manufacturer of all these goods are supplied of notified service. Presently no services are notified, only goods are notified. Then if you are CTP, NRTP, again you are not eligible. Or supplier of service save as provided in 10.1. Means what? That is given here. A registered person opting for composition scheme under 10.1 is allowed to supply service. But there is a capping. What is that capping? Percentage wise, it should not exceed 10% of your turnover, and amount wise, it should not exceed 5 lakhs. So if you breach any of these limits, then you cannot be under 10.1. Yes, you can go under 10.2 subject to fulfillment of other conditions, but you cannot be under 10.1. Now, importantly, as I had mentioned, interest will not be counted in these limits, any of the limits above. So interest is totally outside composition. In no limits, it will be considered. Other points are, you cannot issue tax invoice. You have to compulsorily give bill of supply. You cannot collect tax from your buyers. You have to pay that 1%, 5%, 6% from your pocket. ITC you cannot avail. Also, composition scheme is applicable for all the GSTIN which is under the same PAN. So let us say you are having multiple businesses in different states for which you have taken different GSTIN. For all GSTINs, you will have to take composition. It means either composition for all your businesses or regular for all your businesses. You cannot do that. In one GSTIN, you will take composition. In another GSTIN, you will take regular, not allowed. Next, penalty shall be imposed in case you are breaching any of the conditions of composition. So these are the provisions relating to composition scheme. Fine. I hope it is clear to everyone. Anybody having any questions in this, please put it across. No? Great. Okay, there is something in the chat. Excellent. So again, we'll take a break. And after the break, we'll go to the third chapter, which is allotted for today's revision. Fine. So 7-8 minutes break we'll take, and then we will restart. Let us continue. Now we go to the third chapter, which deals with place of supply. Now in place of supply, students, as you all know, there are firstly two categories of place of supply. One for goods, one for service. And within the two, again, you have two categories, domestic, international, domestic, international. So broadly, we have four categories of place of supply. Place of supply of goods, domestic transaction, determined by Section 10 of IGST. Place of supply of goods, international transaction, determined by Section 11 of IGST. Then place of supply of service, determined by Section 13 for domestic, 12, Section 12 for domestic transaction of services, and place of supply of service determined by Section 13 for international transaction of service. So we have four categories of section of IGST law for determining the place of supply. So let us go to each of this. So this is going to be important for the purpose of your exams. So be clear when we are discussing this. And in case if something is not understood or any of this particular provision is not clear, please get it clear. So first, we deal with domestic transaction of goods, that is section 10. Now, when we are talking about section 10, that is domestic transaction of goods, there are further categories for different types of transactions. First two are where there is movement involved. So there is supply of goods and the supply of goods is having some movement. So where movement is involved and there are only two parties, that is the supplier and the recipient. What is the place of supply? The place of supply is the location where the movement will terminate. So it simply means if I am supplying goods to you and the supply involve movement of goods, in such cases, wherever the goods will be delivered, that place of delivery, I'll just substitute this by a simplified word. So in this case, the place of delivery is the place of supply. Second is again where there is movement involved, but here where there are three parties involved, which is called as bill to ship to. So let us say I am supplying goods to you. The contract of supply is between me and you, but you have asked me to deliver it to some third person's place. Now here I cannot apply the first point because as per first point, the place of supply will be the place of delivery, but that is not applicable here if it is a tri-party transaction. In such a case, the place of supply where three persons are involved is the billing address. So students, please be clear with the exact place of supply. So where two persons are involved and there is movement involved, the place of supply is place of delivery. Where three persons are involved and it is a bill to ship to transaction, the place of supply is not delivery, it is the billing address. So the goods are going somewhere else, but the place where I'm billing, that is the place of supply. Next, where there is no movement involved, then it is the place where the goods are at the time the supply happens. So this is generally where I buy anything on as is where is basis. So where goods are kept at a place and I take the delivery there itself, or I am taking your furnished house or furnished uh, office. So whatever is the furniture and the other installations in the office, that is what I'm buying on as is where is basis. So the place is place where these goods are. Again, this is important. In case of B2C supplies, that is where the goods are sold to unregistered persons. Now here, we also call it as over-the-counter sale. So in short, wherever you go to a shop to buy goods and you are not having a GST registration. So what purchases we are making in our day-to-day for satisfying our day-to-day necessities, that is what is covered over here. The place of supply is the address which is mentioned on the invoice. So let us say I'm coming to your shop, I'm buying the goods. Your shop is in Delhi, but I'm saying I'm from Gurgaon, I'm from Haryana. Your place of supply will be Haryana. So important is in case where the supply is made B2C, the address mentioned on the invoice will be the place of supply. So you may be selling goods at your desk, at your shop, but the place of supply will be the place mentioned on the invoice. Here it has been clarified. Then even writing the name of the state is sufficient. Entire address is not required. So even mentioning the name of the state, that state will be the place of supply. Next, where the place of supply, where again the supply is made to unregistered person and no place is recorded. Now this happens in case of cash transactions where like we go to a shop, we don't even mention our name. So mentioning our address and all is very far off. In such case, the person makes a cash bill without mentioning anything. The place of supply is the shop itself. That is the location of supply. Next, where the supply involves installing the goods at a particular site or assembling the goods at a particular site, the place of supply is the place where the goods are assembled, installed. Next, where you are traveling and you purchase the goods while you are in travel. So while you are in travel, you purchase the goods. This is where the place of supply is determined as per point number 7. The place of supply is the place where the goods were onboarded. So let us say you are traveling by plane, and while the plane is in its journey, while you are on the way, you buy some goods on the plane. In such case, the place of supply is the place where the goods were taken on board the plane. So wherever these goods were loaded on the plane, that is the place of supply. And last is where the place of supply cannot be determined as per our provisions. The government will give the manner in which they have to be determined. That is, they will provide rules. Till now, there are no such rules for this. So there is no place of supply for this. Next, place of supply of goods in case of import or export, that is international transaction, is simple. In case of import of goods, the place of supply is the location of importer, not location of import. So my goods are imported at the Bombay port, but if I am from Madhya Pradesh, the place of supply is Madhya Pradesh, that is location of importer, my location, not Bombay port where the goods are imported. In case of export of goods, the place of supply is the place outside India, that is where the goods are destined. Now here, Khalid wants example for, Khalid, you have said you want example for which case? Point number 2, bill to ship to. Okay, I'll give you example. So let us say I'm in Maharashtra, Mumbai, Maharashtra. Let us say you are in Pune, Maharashtra, and Swaminathan is in Chennai, Tamil Nadu. Now, Swaminathan places order on me for buying 10 mobile handsets. Swaminathan also has a transaction with you where actually he has to supply it to you. Now, please understand the transaction. I am the distributor, Swaminathan is wholesaler, and you are the retailer. So, Swaminathan contacts me because you have contacted Swaminathan for buying those 10 handsets. Swaminathan comes to me, places an order with me. Now, interestingly, since Swaminathan is in Chennai and we both are in Maharashtra, first, if I send goods to Swaminathan's place in Chennai and again he sends to you in Pune, the transportation cost will be very heavy. Instead, what Swaminathan tells me when he's placing order on me, I'm in Mumbai, Maharashtra, he's in Chennai, Tamil Nadu. He says that, sir, you don't send the goods to me at Chennai. You directly dispatch it to an order, to an address which is in Pune, which is nearby to you. So I said, fine. So in this example, Khalid, I am the supplier from Mumbai, Maharashtra. The buyer, that is Swaminathan, is from Chennai, Tamil Nadu, and the goods have to be dispatched to you. You are in Pune, Maharashtra. Now, in this particular case, it is the example falling in situation 2, which is called as bill to. So I'm billing to Swaminathan, ship to, I'm shipping to you. This is bill to, ship to transaction. Now here, even though physically the goods are moving from Mumbai to Pune, both are in Maharashtra. But since we are falling in point number 2, which is bill to ship to, the place of supply, as I said, is the billing address. So I will be raising invoice on Swaminathan with the place of supply as the billing address, which is Chennai, which is Tamil Nadu. So I will levy IGST. This is what is given in point number 2. Now you have to understand here that Swaminathan is also having a transaction with you. That is why I have dispatched the goods directly to you. So the second bill will be by Swaminathan to you. Here Swaminathan will apply rule 1. That is, he will take place of supply as place of delivery. So he will bill to you with IGST and place of supply as Pune, Maharashtra. But this point number 2 deals with transaction between me and Swaminathan, where I will apply rule 2. because we are falling in situation number 2, that is build to ship to, and my place of supply will be Chennai, Tamil Nadu. Fine, brother? Perfect. Good. Okay. Now we proceed to Section 12 of IGST Act. This deals with place of supply of service. Now here, Section 12 is where it is a domestic transaction, 13 is where it is international transaction. Now what is the difference? When you say that a service transaction is domestic and when a service transaction is international. Here, it is not mentioned import export like goods. Here, if the supplier and the recipient both are from India, that is the location of supply, location of recipient is in India, we say it is section 12, that is, it is a domestic transaction. So you apply section 12 for determining place of supply. Sorry. In case if one of us is outside India, so let us say supplier is outside, recipient is from India, or vice versa, supplier is from India, but recipient is from outside India. In this case, this becomes a section 13 transaction. So let us call it as international transaction because one of the person is outside India. And in this case, the place of supply of such transaction will be determined by section 13 of the IGST. You should remember one thing very clearly, students, that it is not at all important. You will not see where exactly the service is performed, where the place where the service is performed, that place, the physical place of performance of service will never be seen in determining whether you are falling in section 12 or 13. So service may be physically performed outside India. Still, if supplier recipient both are from India, you check section 12. If one of them is from India, one is outside, you check section 13. So this is what is important, this is what you have to keep in mind. So don't see the actual place where services are being rendered or performed. You will see where the supplier is, you will see where the recipient is. If one is India, one is outside India, it will be section 13. If both are in India, it will be section 12 for determining the place of supply. Correct? Now, if both supplier and recipient are from India, so we call it as domestic transaction. And then you check section 12 for determining place of supply. Now, what does section 12 deals with? So first, you have the residuary section, which says that if you're not fitting in any of these specific rules, then you apply the residuary section. But we first see the specific rules because residuary applies only when you're not fitting in the specific rules. Now, specific rule is first, where the services are immobile property related service. Now, what are immobile property related service? It may be the construction of immobile property, it may be the renting of immobile property, it may be the leasing of immobile property. So all these are immobile property related services. The place of supply is the location of the immobile property. However, if the property is located outside India, the place of supply will be the location of the recipient. So this is what is very important, student. This part you have to be very clear with. So in case of immobile property related services, there are two possibilities. If the immobile property is in India, the place of supply is wherever, in whichever state the immobile property is. Second, if the immobile property is outside India, then the place of supply is the location of the recipient and not the immobile property. Next, if immobile property is in multiple states, so if the immobile property is located in more than one state and you have one single contract for the entire transaction, then it says you have to proportionate your value between all the states because since the place of supply will be each state, then every state should get the revenue. How you will do that? You will have to use a proportion. Next, if your service is a restaurant or catering service, or you are into personal grooming like makeup, etc., or you are into fitness like you are some gym trainer or something, or you are some fitness expert, or you are doing some beauty treatment like running a salon or a health service. For that, I mean it is exam, but all for all these services, the place of supply is the physical performance location. So here you will see the place where the services are actually performed. So this is the service where you will see the physical place of happening or performance of service. Next, where training and appraisal services provided. Now we all understand what is training service. There are two answers. If this service is done for a registered person, which is called as B2B, the place of supply is the location of the registered person. But if it is done for an unregistered person, which is called as B2C, it is again the place where actually the training is done. So it is the place where the services are actually performed. So for training, there are two answers. Next, when you go to any event, like you are going to a fashion show, you are going to some this award function, or you are going to an amusement park. So nowadays we have multiple amusement parks where we go with our family or we go with our friends for enjoyment, for entertainment. So in all these places, like an event or an amusement park, there is some entry fee. You have to pay some amount as a entry fee to these places or events. What is the place of supply? Only for this entry fee. The place of supply is the place where the event is being held or where the park is located. The theme park or the amusement park is located. That place will be the place of supply. However, the service for organizing an event. What is organizing an event? So if I want to organize this beauty contest, I will be organizing somewhere it in Delhi, Mumbai, somewhere. Now I am the organizer of the event. Now for organizing this event, I will take the services of some event management company. This service is called as organization of an event service. The place of supply is, if it is a B2B transaction, it is the my recipient's location wherever I'm located. But if it is a B2C transaction, that is where I'm unregistered, the place of supply is the place where this event is actually happening. If this event is happening outside India, again it will be the location of recipient. So this is what is the services relating to event organization. Now, if the event is to be held in multiple states, let us say I want to conduct this beauty contest in 5 states. And for this 5 states, I have given a lump sum contract to the event organizing company. In this case, again, the value has to be proportionated between all states because all states should get the revenue. Next, for goods transportation, so you can call it as GTA service. What is the place of supply? If the service is given to a registered person, it is the place of the registered person. Then here you will not see from where to where the goods are going. But if the service is given to an unregistered person, then the place of supply is the place where the goods are given to the transporter, or in simple words, it is the starting point of transportation service. So be clear, it will not be the end point of transportation service, it will be the starting point of transportation service. So if the goods have to be transported from Karnataka to, let us say, Surat, Gujarat, then first you have to check whether the recipient of this service is registered. If recipient is registered, you take his location as place of supply, wherever he is. But if the recipient is unregistered, then you will see from where to where the goods are going. The goods are going from Karnataka to Gujarat. In such case, the place of supply is the starting point of transportation, that is in this example, Karnataka. Similarly, if we are talking about passenger transport service, so let us say you are traveling by train, by flight. So what is the place of supply for such service? One, if the recipient is a registered person, it is the location of recipient. If it is to an unregistered person, it is again the starting point of the journey. So same like goods transport, even for passenger transport, the answer is same. So the place from where your travel starts. So that starting point is the place of supply where the recipient of service is unregistered. Next, where you are taking any service while you are in travel, then the place of supply is the first scheduled point of departure. Means it is the station, it is the port, airport from where the flight starts or from where this particular journey starts. That is the place of supply of services which are to be provided while you are in travel. Next, for banking services, for stock broking services, one, it is the location of recipient if available in records of the supplier. If the location of recipient is not available in the records of the supplier, it is the location of the supplier itself. For insurance service, it is always the location of recipient. So though they have given it separately, it is always the location of the recipient, because in insurance, you always have the address of the recipient. Next, in case of advertisement services, where it is given to government, where the advertisement has to be displayed, broadcasted in different states, it will be each of the states. Again, the value has to be proportionated. And next, for telecom services, now telecom can be of two types. One is the fixed telecom lines, which may be the telephone service or internet services using some fixed equipment, or it may be the mobile. Where it is using the fixed equipment, it is the location of such equipment. So where you have installed the fixed telephone, or where you have some modem which is providing the internet services, the place where this equipment is installed, that is the place of supply. However, in case of mobile, there are two answers. Again, one is your bill is postpaid or your bill is prepaid. Now for postpaid, the place of supply is the billing address. So it is again the recipient's location. But for prepaid, there are different answers. If you are buying a prepaid voucher, or you are getting the talk time from some shopkeeper, then the address of that shopkeeper, address of that person who is doing the recharge, is the place of supply. However, where you are doing the payment through some electronic mode, that is now you are recharging your mobile, which is a prepaid mobile, online only. Nowadays, we are doing that. It is again the location of recipient in the records of the supplier. And where the address of the recipient is not available, then it is the location of supplier. But practically today, as per government norm, this is impossible. So you will not give a SIM card without knowing the location of the recipient. So this will not happen. So Swaminathan, nowadays address will be there in, because KYC is compulsory. So if KYC is compulsory, so it is without address, it is not possible. Okay. Now, wherever you have to proportionate the value, how you will proportionate? So here they have given manner of determining proportionate value of immovable property, where the service is attributable to different states. So where immovable property related service is there and the service has to be apportioned between different states, what is given? First, service provided by way of lodging accommodation in multiple states. Here you will see the number of nights stayed in each property. So let us say you are traveling in 4 different states and you are traveling and going to stay in different states for different days. I have given you a lump sum package of 5 lakhs. How this 5 lakhs will be apportioned between these states? So in every property, you would be staying for some number of nights. So depending upon the number of nights stayed, I will apportion the 5 lakhs value. Next, all other services provided in relation to immovable property, including services like organizing a marriage or reception or accommodation in a single property which is located in 2 states. Then how you will apportion the value? It will be on the basis of area of immovable property which is in different states. Next, services by way of lodging accommodation in a houseboat or a vessel. Let us say you are going on a cruise and the cruise is crossing multiple states. Then how will apportion the value of the cruise? It will be on the basis of time spent by the boat vessel in different states. So this is how they have given you the manner of apportioning. Next, manner of determining proportional value of service relating to an event. So as I gave you example, I want to organize this fashion show in 5 different states, and I have taken a lump sum contract where the contract value is, let us say, 1 CR. How to apportion? So everywhere first preference is your contract, but where the contract is silent, then it says organizing of event services, proportionate value of service to be computed by applying generally accounting principles. So how you'll account for as per your accounting principles, that will be applied here. So they have not given any specific method. And then comes the method for proportionating the value. Now here, which value has to be proportionated? Where advertisement services are given to government in different states. Now, how you are giving the service is important. First, service is given by putting the advertisement in newspapers or publications. Then how will you apportion? So let us say the government has given me contract to publish their ads in newspapers of 10 different states, and I'm giving a lump sum quotation of 1 CR. How this 1 CR will be apportioned? It says the amount payable for publishing an advertisement in all the editions of the newspaper which are published in each state. So what you will do is you will see the number of editions which are published in each state on the basis of the number of editions published. So let us say in one state the newspaper is published in, let us say, 10 lakh quantity. In another state it is in 1 CR quantity. In another state it is in 2 lakhs quantity. In another state it is in 20 lakhs quantity. I will use this number, that is a number of publications which are released in every state, and that ratio will be taken as the ratio. Next, second is advertisement is through printed material like distributing pamphlets, etc. So many times government has asked me to distribute pamphlets or giving t-shirts in different states. Then the amount which is payable for distribution will be apportioned on the basis of specific number of such material. So I'll have to see how many pamphlets I have distributed in each states or how many t-shirts I have given in each states. Next, where hoardings are put in such a case, and this hoardings is not on train because train is moving. For that you have different mechanisms. So let us say these are fixed hoardings on the buildings or on some open areas. In such case, the amount payable for the hoardings located in each states, you will find out what is generally the value of these hoardings in each states, and you'll take the proportion. In that proportion you'll divide the value. Next, where advertisements are put in trains and trains are moving across different states, then how the apportionment will be happening? So amount attributable to each state is calculated in the ratio of the length of the railway track. So if the train is moving from Mumbai to Delhi, you will count the total kilometers, and then you will see how much of this total kilometer is falling in state 1, in state 2, in state 3. In that ratio you'll apportion it. Next, advertisement on the back of utility bills or oil, gas, etc. So we receive electricity bills. On that, you get many advertisements. So where on any of these bills, advertisements are published, then and these bills are spread across India. So let us say I have taken the contract of publishing advertisement in light bills of 4 different states. How will I apportion the value? The amount payable to each state will be on the basis of the number of bills that will be given in each state. So I will be sending the bills in every state. So how many bills are sent in each state, that will be the proportion. Next, similarly, where advertisements are printed on railway tickets, again, what will be the proportion? The amount attributable to each state will be calculated in the ratio of number of railway stations in that state. So here we are not seeing how many tickets are printed and given in each state. Here we are seeing the number of railway stations in the states, and that will be the ratio. Next, advertisement which is broadcasted on radio. Here, if it is again the radio channel is being broadcasted in multiple states, how you will apportion? Here they are saying amount payable to such radio station which by virtue of its name is part of each state, etc. So we will see how many radio stations are there in each state, and accordingly we will apportion. Then advertisement, where advertisement is in some television channels. Here we will go by the percentage of viewership of that channel in each state. So every channel has a viewership. So we'll find the viewership of that channel in different states, and that viewership will be the ratio. Now, viewership figures of which period will be taken? So they are saying viewership figures for the last week of a given quarter as published by the BRC. BRC is the authority which measures and gives the data of viewership. So you will take the figures of the last week of a quarter, and this can be used for calculating the viewership for the next quarter. So if I want to apportion for January to March, I will take the viewership of the last week of December for apportioning for January to. Figures pertaining to more than one states are apportioned in the ratio of population of those states. Now, when this will be done, if by chance the viewership figures are not available, then you will take the population figures. Next, where advertisements are played in some cinema halls, then amount payable to the cinema hall or screens in the multiplexes in each state, which is easy to determine because you will be paying amount to each cinema hall separately. Next, advertisement which is put on internet. Now this is important. What it says, it is deemed that such services provided all over India. So when you are putting it on internet in, let us say, Facebook or something, we assume that is provided all India. Now it has to be apportioned in all the states. How? Amount attributable to each state will be calculated on the basis of the internet subscribers in each state. Again, the internet subscriber figures of last quarter of a given financial year as published by TRI can be used, and figures pertaining to more than one states are apportioned in the ratio of population. And last is where advertisement is through SMS. Then amount attributable to each state is calculated on the basis of number of telecom subscribers, again on the basis of the figures given by the TRI. So this is how they are saying that you will apportion the value for all these common services which are spread across multiple states. Next, manner of determining proportionate value of service relating to installation of a lease circuit attributable to different states. So let us say a lease line is installed or placed and it is passing through different states. How will you find out the value attributable to each state? So it says that again, firstly on the basis of contract. If not, then the proportion is on the basis of number of points lying in each state. So when I've installed a line, let us say an internet line, so you have a line going below the ground and it is running through 2, 3 states. So in each state, how many points are there? So on the basis of the points, the value will be apportioned. So this is how apportionment will be done. And then comes the last rule, which is the general rule. So where any of the specific rules are not applicable, so your service is not falling in any of the specific rules, you apply the general rule. What is the general rule? So the place of supply is if the transaction is between a registered person, that is, I am supplying to a person and the recipient is a registered person. The place of supply is the address of the registered person, that is the recipient. But where my service is to an unregistered person, which is B2C, first you will check whether the recipient's address is available on my record. If yes, the address of recipient, that is the location of recipient, is again the place of supply. But where I don't have the address of recipient on my record, then the location of my, that is the supplier, is the place of supply. So this is the general rule. So for general rule, again, you have to see whether it is B2B or B2C. Fine, students. So with this, I conclude my session. From here, Shubhankar ji will take over and we'll complete section 13 in our next class, which is on 16, along with the other topics. Over to you, Shubhankar ji. Thank you.
Thank you so much, Vishal sir, for concluding, for giving this revisionary lecture to all the students in a very comprehensive and detailed manner. As far as the chapters are concerned, 3 chapters are covered today: supply under GST, charge of GST, and the place of supply. All 3 chapters are important in the exams. These chapters are important for the individual questions also, and the concepts are covered in that first compulsory question, which is integrated, which comes as an integrated question in the exams. So all the questions and the assignments related to these chapters have been already being uploaded on the BOS knowledge portal. Please check it and you can solve the questions, the revisionary questions. And in case if you're not able to find the notes or any kind of the assignments on the portal, you can let me know you can let us know on the query portal, or you can send the mail to the relevant email ID of the BOS. So the topics were being comprehensively covered as sir have detailed, as sir have explained the chapters in detail. The place of supply chapter was one of the biggest chapters in the revisionary classes which the sir has covered, and the way he has covered all the provisions of the place of supply was good enough and was sufficient enough to understand each and every concept. And if you feel any kind of the problem And if you have any kind of the doubt in these chapters, so you can let us know through the query portal, or you can send the mail also. With these things, with these words, thank you so much, Vishal sir. Let's wrap up this meeting.
Thank you, sir. Thank you, students. So we connect again on 16 and we carry forward our revisionary class. Fine.
Okay, thank you so much.
Thank you, Shubhankar. Yeah, done, sir. Thank you. Thank you. Good
Okay,
night,
sir.
everyone.